Hey everyone, Supermicrocomputer's latest earnings results had a lot to digest. It had soaring revenue mixed with falling profit margins, missed expectations on earnings, rising inventory, and a robust forecast for the next fiscal year. So that's a lot to digest. I wanted to go through each of those items one at a time and really discuss what it means, what each of those things means for supermicrocomputer stock investors, so you can understand the stock movements as it relates to these items. So let's take a look.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Supermicrocomputer reported that the OEM appliance and large data center segment grew 149% in the latest quarter and represented 58% of total revenue. One specific large data center customer represented approximately 20% of revenues for fiscal year 2024. Now, in business terms, this is a high concentration of revenue to one customer, and this is risky because if you have one customer with such a large percentage of your revenue, they can at any moment go to your competitor, and then that will cause your revenue to fall by 20% just by losing one customer. That's a big risk. Also, that customer knows they're a big customer of yours, and so they can flex their negotiating power more effectively than perhaps other customers that are less of a percentage of your total revenue. So you have higher risk from the customer leaving, and you also have less negotiating power with this customer because they're such a large percentage of your revenue. The one good news that came out of the quarter was that ASPs, which stands for average selling price, increased year over year and quarter over quarter, driven by the value and complexity of rack scale and total IT solutions. So this is good news because Supermicrocomputer's profit margins, as I'm going to discuss a little bit later, fell considerably, and one way that they can recover those margins is through higher prices. Alright, so here we go with the profit margins, where gross margin at 11.3% was down from 15.6% in the previous quarter due to product mix and customer mix. Also, this strategy where Supermicrocomputer says they're focusing on winning strategic new designs with competitive pricing. And then there's higher initial costs and ramping production of the new DLC AI GPU clusters. Out of those things, the most troubling is where they say they're trying to win new designs with competitive pricing. This means that in order to secure sales, Supermicrocomputer is having to offer lower and lower prices or incentives or promotions to their customers. So their sales are absolutely soaring, right? They doubled year over year, more than doubled, and they're on pace to quadruple in 2 years. So sales are exploding, but those sales are not as high quality as you might like them to be because they're having to offer lower prices to secure those sales. It would have been more impressive if they were securing those sales with higher prices at full price, right? That's what Nvidia is doing. That's why Nvidia's stock price is exploding higher, is because Nvidia's sales are growing similar to or even higher than Supermicrocomputer, but at the same time, Nvidia is getting full price for its products. It's not having to offer any deals. Customers are grateful if Nvidia will sell to them because their products are getting sold out. So that's a big difference there. And Supermicrocomputer with Nvidia is that Supermicrocomputer is having to offer competitive pricing, which is not great. Because, as you might imagine, if Supermicrocomputer is lowering prices, then its competition is seeing that, and maybe they will lower prices. And if they lower prices, then what's Supermicrocomputer going to do? Are they going to match another lower price? And so it creates this kind of race to the bottom, which is bad news for the company, and it's bad news for investors. So that's a big risk there. That's one of the main reasons why Supermicrocomputer's stock price fell as much as it did following the earnings release. is because of the falling margins and the reason for the falling margins. Still, management sees a path to improve gross margins to the target range of 14 to 17%. So they were already at 15.6% and even better last year. So they're just trying to recover back to these levels. So it doesn't appear that there's large room for margin expansion for Supermicro Computer. The increase in sales is not leading to increases in profit margins, which is what investors like to see with companies like Supermicro Computer, is the rising sales leading to rising profit margins. All right, another reason the stock price fell following the earnings release is because the fourth quarter earnings per share of $5.51 was below the guidance of between $7.20 and $8.05. So this was due to lower gross profit margins and higher operating expenses in the quarter. So this was well below their guidance range, and it looks like Supermicro Computer, as the quarter progressed, they realized their sales were not as robust as they thought, and they had to offer lower prices, or as they were securing inventory or manufacturing logistics, the operations didn't go as planned. Something didn't work as they thought it was going to work, which led to this lower performance. Now, this is what I've talked about with companies that are growing as quickly as Supermicro Computer is growing. When you're expanding your, multi-billion-dollar business at rates of 100% or more, that's a challenging business task to execute. It's very challenging, and you often have these situations where things don't go as planned. There are some challenges and there are some disappointments. So this is to be expected with Supermicro Computer. It's one of the reasons why this stock is not trading at premium valuations. You might say it's not trading at valuations closer to some of the other AI companies. And it's because the business model is not very attractive. It's not very lucrative. We talked about the gross profit margins above. And, gross profit margins in the mid-teens are not something to be excited about. Many companies have gross profit margins up in the 70, 80% range. So a gross profit margin in the mid-teens, not exciting. It's a hardware business, difficult to grow, difficult to scale, and you're seeing some of those growing pains with Supermicro Computer. So with the falling profits and the negative cash flow, which we'll discuss in a little bit, Supermicro Computer increased its share count, so it sold stock to raise cash. It added 3 million shares. And what that means for investors is now the net profit will be split among more shares, thereby decreasing the earnings per share. All right, so fourth quarter cash flow in operations was negative 635 million compared to negative 1.52 billion in the previous quarter. So they've sustained several consecutive quarters of negative cash flow from operations, which is why they needed to sell stock and borrow money to sustain this level of expansion. And the reason it's negative is because they need to buy inventory and pay for inventory before they get paid from their customers. And so that mismatch of timing is causing the negative cash flow from operations. And speaking of which, fourth quarter closing inventory at 4.4 billion was almost triple the same time last year. But the reason inventory is rising is a good reason. Inventory is increasing in anticipation of future growth. Now, sometimes companies' inventory increases because they prepare for a sales cycle and they build up this inventory, and then it turns out sales weren't as good as they thought, and so the inventory rises unexpectedly. Another reason inventory increases is because you're anticipating sales growth, like Supermicro Computer is, and so you're building up your inventory because you know you have sales you're going to make. And the way Supermicro Computer's business works with sales made and orders made ahead of time, they can be reasonably confident that these inventories will actually get sold and will not stick with Supermicro Computer. All right, so I hope this was helpful in clearing up some of the big items that came out of Supermicro Computer's latest earnings release. And I know the stock price has been volatile, falling more than 20% following the earnings release. And so I wanted to provide an explainer of some of those big items.
Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.